It's been a relentless wave of disappointing economic data as China's COVID-19 lockdowns take a toll on the country's consumption, industrial production, and employment. In April, the Chinese jobless rate rose to 6.1%. That's the highest since February 2020. Retail sales in April shrank 11.1% year-on-year after contracting in March. Demand for food and vehicles was hardest hit, with car sales slumping 46%. In Shanghai, a city of over 25 million, not a single car was sold in the month of April. And the price slump continued in the property market, with new home prices falling for an eighth month.
I think China's economy is already in a slowdown because of all the prolonged restrictions, not necessarily lockdowns, but restrictions in other parts of the country. Household consumption and consumer sentiment are pretty weak at the moment.
In our view, the trough likely took place in April. May will also be quite weak, but slightly better than April. And in our baseline, we do expect activity to sort of gradually pick up starting in June. But even so, that is in our expectations likely to lead to a quarter-on-quarter contraction during the second quarter of this year before the economy picks up in the second half of this year in Q3 and then even stronger in Q4.
China has set a growth target of 5.5% for 2022. But the slew of bleak economic data is raising fears that this target will not be met.
This year, it will be very challenging for China to meet the government's target of around 5.5%, given that we have a very weak second quarter, and also the fact that with China maintaining its dynamic zero COVID strategy, meaning that perhaps the stimulus through fiscal or monetary easing may not be as effective as they should have been in a normal situation.
There will be considerable policy easing this year, but when we put it all together, we do think that the policy easing is going to cushion the economic impact of the slowdown, but it certainly will not offset the brunt of the economic slowdown that's taking place. And so in our baseline, we have growth slowing to 4.3% this year, which quite a ways away from the official growth target of 5.5% based on current trends.
But Beijing faces a policy dilemma. While the zero COVID policy has slammed the brakes on the economy, reversing the strategy will come with its own set of problems.
Even if you open today with only half of the population having the booster shot, this also means that if there's a significant reopening, moving away from zero COVID, there will still be lots of workers absent from work because they got infected, they got sick, and they cannot go to work. So the impact on the supply chains is still highly unpredictable, even if we abandon the zero COVID today within China.
China's economy also faces headwinds from structural and cyclical challenges. A slowdown in demand for Chinese goods due to the weaker global economy. And at home, consumption growth that has remained stagnant in real terms. Experts say this doesn't leave many options for Beijing.
The only possibility left for China's growth in order to sustain its, in order to achieve its 5.5 GDP growth target this year is a large-scale infrastructure investments in 2022. China has finished nearly all of the 5G infrastructure building in the past couple of years. And so now for China, the key is really to find high quality and high growth infrastructure projects to develop rather than spending money just for the sake of spending money. And so China will possibly use this opportunity to develop large-scale renewable energy infrastructure, including building EV stations all over the country, possibly wind farms, solar energy production facilities, but also China's urbanization ratio has just hit 60%. So the rural development is going to be a high growth priority for China as well.
Any slowdown in China will have spillover effects in the region. And according to a report this week by banking company Natixis, Singapore could see the largest knock-on effect. But there could also be a silver lining for the region as supply chain disruptions create new business opportunities.
The semiconductor industry will continue to be concentrated in South Korea and Taiwan in Asia. Vietnam will be well poised to replace quite a lot of the middle to low end of the Chinese production capacity. And India will rise as a regional tech economy. And I think Singapore will serve very strongly as an Asian financial headquarters and a financial center. China's slowdown will impact the global supply chain in a fundamental way, but it's not all bad stories for all Asian neighbors.